Hello and welcome to the next episode of Mayor Brown's video series, At the Crossroads, CFTC and DOJ Enforcement. My name is Matt Kluchenek, a partner at Mayor Brown and a member of Mayor Brown's Litigation and Dispute Resolution Group. And I'm joined once again by my partner, Glen Kopp, a former federal prosecutor out of the Southern District of New York and a member of Mayor Brown's white collar defense team. Each week, as you may know, our goal is to bring to you an interesting and exciting topic involving the intersection of the CFTC and the DOJ. And today, I think we have a good one. Glenn?
Thanks, Matt. So today we're going to talk about cryptocurrency. It's been a hot topic in the news across many media sphere, and I think it really fits nicely into the discussions we've been having about the overlapping enforcement priorities and enforcement by the DOJ and the CFTC. When we talk about cryptocurrency, what we're talking about is a digital representation of value. Can be used as a medium of exchange or store of value. And I think what's obviously important is how the DOJ and the CFTC view cryptocurrencies and how they approach enforcement. So Matt, if you could you kick us off and talk about the CFTC's approach or view of cryptocurrency?
Sure, thanks, Glenn. So the CFTC actually was very early on the scene with respect to establishing a regulatory position. All the way back now to 2015, it actually issued a proclamation stating that virtual currencies, which essentially means cryptocurrencies, crypto assets, digital assets, so on and so forth, but virtual currencies are commodities under the Commodity Exchange Act. And so that carries some significant repercussions, which we'll talk about in a second. Most significantly, the CFTC has authority to pursue spot or physical market fraud or manipulation where there's no derivative involved. So that was a relatively early proclamation. Now it seems that every regulator in the U.S. and many outside the U.S. want to get involved and have some piece of the pie in terms of regulation. There's been a lot of development, evolution with respect to the CFTC and its regulation, but at core, critical thing to keep in mind here is cryptocurrencies are commodities. So again, that carries implications under the Commodity Exchange Act. So Glenn, we've seen, as we've discussed and as we've worked on a number of investigations and actions involving cryptocurrency spot and physical transactions. There's obviously been a lot of involvement by the CFTC and the DOJ as well. If I can ask Glenn, why don't you start us off and talk a little bit about the DOJ's kind of views and positions and what it's been doing with respect to cryptocurrency fraud?
Absolutely. So back in, God, it feels like a long time ago, but back in 2018, DOJ started a cyber digital task force, basically to sort of look at the landscape of emerging technologies and how that was impacting prosecution and where DOJ stands and all that. And what at least one of the things that came out of that, of the task force work, was in the fall of 2020, they issued the cryptocurrency enforcement framework. And that essentially defined the views of DOJ as far as where are the areas of cryptocurrency is of concern for DOJ. And another way of saying that is, how can cryptocurrency be used illegally or illicitly? And so they laid out sort of three main areas. The first one, not necessarily an area that we're going to focus on, which is the use of crypto for committing crimes like drug trafficking or financing of terrorism. So that's in one bucket. The second bucket was the use of crypto to sort of hide illicit funds, whether through money laundering or through tax evasion, also by using it for sanctions evasion. Another sort of subcategory there is unregistered exchanges and use of methods to avoid having to register or be licensed, and so failures to follow through with like the Bank Secrecy Act requirements, again, all in the realm of sort of hiding and moving illicit funds. And then the last bucket which we can kick off our discussion with about, is the use of or manipulation of cryptocurrency and cryptocurrency markets. So whether that be through various means that you might be more familiar with in the securities markets, whether that be touting or pump and dump schemes and those kinds of things. And so I think what it sets up is these sort of archetypal cases that I think we'll talk about now that will involve both the DOJ and, not surprisingly, the CFTC, which is what DOJ even called out in their framework, highlighting that the DOJ and the CFTC, among others, are going to be sort of taking the lead in the enforcement in the area of illicit use of cryptos. So Matt, if you would, you want to sort of kick us off on sort of these sort of archetypal cases, ones that we've seen over the last couple of years and ones we expect to continue to see, both the DOJ and the CFTC moving sort of hand in hand.
Sure. And let's start with from a CFTC's perspective. So the CFTC really has a couple of different avenues to pursue these cases. Again, as noted very briefly at the top, is with respect to spot market, physical market transactions. Think of just, in theory, buying or selling something off of eBay or any marketplace. So if it involves a commodity like a cryptocurrency, the CFTC has express anti-fraud, anti-manipulation authority to pursue violations. And we've seen a rash of those. And so that's sort of avenue bucket number one. Number two is the notion that there's within the Commodity Exchange Act, something we refer to as the retail commodity transaction provision. And what that essentially says, and sometimes it operates as a trap for operators because again, there's no derivative involved. But if you have retail participation, which is defined as essentially offering a cryptocurrency to someone who is not an eligible contract participant. So you have a retail person and you have any element of leverage or financing. So if somebody offers to enter into a transaction and perhaps allows or permits margin to be posted or full payment not to be posted, and perhaps a financial or cash offset when the cryptocurrency is sold. If you have those two factors, and then you do not have actual delivery of the cryptocurrency on the blockchain within 28 days, and there's a number of very intricate rules around that, then you're subject to the retail commodity transaction provision, which means a number of things. Again, you're squarely within the ambit of the Commodity Exchange Act and CFTC rules, but it also means that you have to evaluate whether you're required to be registered, possibly as an introducing broker, as a futures commission merchant, or maybe even as a designated contract market or a DCM. And we saw going way back to 2015, 2016, the CFTC using that tool, the retail commodity transaction provision, to pursue what it viewed to be as fraudulent, either fraudulent activity, manipulative activity, or activity involving offerers, persons who were not properly registered. And that continues in full force today. And so more recently, we've now seen a shift. Glen, essentially the CFTC teaming up with the DOJ. I think there's been a number of significant cases. One has involved John McAfee and one of his former partners. Complaint was filed by the CFTC alleging a cryptocurrency pump and dump scheme, where allegedly McAfee would make various, would essentially accumulate a position, make very positive comments about cryptocurrency going up in value. It would go up in value, and then allegedly McAfee and his former employer would sell off their positions and generate fairly sizable profits. It's the first sort of CFTC manipulation case we've seen in connection with cryptocurrencies. And it's probably a harbinger of more cases to come. And really, when we think about it from a framework perspective and manipulation, whether it's a cryptocurrency, whether it's oil, corn, wheat, whatever the case may be, the nature of the commodity doesn't matter so much now that the CFTC has said that virtual currencies are commodities. But this particular case really highlights that the CFTC is focused on cryptocurrencies. They're expanding the envelope, and we've seen this. So we've talked about, in connection with spoofing conduct, for example, the nature and the form of it. So continue evolution outward in terms of the types of abuses the CFTC is focused on. And Glenn, the DOJ also had an interest in that case, right?
That's right, Matt. They also brought charges against McAfee and others in that case. And I think it sort of highlights the concern the DOJ has, where individuals who either have pre-existing standing in maybe the tech world, so they've got a following, they already have maybe some bona fides and people are following them, whether it's on Twitter or other means of communication, and they're taking advantage of their sort of position to tout or to promote to a retail customer base that may be a bit vulnerable, and hoping to take part in a trend or jump aboard and make some money. And I think that DOJ is definitely going to be focused on that going forward, whether it's in the pump and dump context. McAfee was also involved in what they would call touting, in particular with some initial coin offerings. And so that will be an area of focus. And I think similarly with folks who might not necessarily have the same name recognition that McAfee had from his prior jobs or prior time he spent in the sort of cybersecurity space, computer security. But anyone who might be positioning themselves as sort of knowledgeable in the crypto space can take advantage, again, of unsuspecting retail investors. We've seen now cases that line up in this sort of Ponzi scheme style of cases, and I think that will be common where you're dealing with, for example, crypto trading pools, where folks are investing cryptocurrency in order to have somebody into a pool so that an individual can invest in other cryptocurrency or exchange cryptocurrencies. And I think that's an area that DOJ has been active and will continue to be active to try to protect, in that instance, the retail investors. I think what another place, Matt, that DOJ and the CFTC have made some noise, and you mentioned it earlier, is the area of exchanges and the need for certain businesses to register, including as futures commission merchants, and what that entails and why that has become important both for the CFTC and DOJ. If you want to sort of comment a little bit, what does it entail when you register as, say, for example, a futures commission merchant?
Sure. And so what we've seen in a number of instances are platforms. Many of them, quite frankly, are located outside of the US, but they're marketing to US persons. And maybe they offer, various types of contracts. It might be spot, but it might be contracts for differences, CFDs, which are actually swaps. There could be other elements. Again, this, notion that it's being marketed to retail persons. There's an element of leverage without actual delivery. And so that generally necessitates registration as a futures exchange. And again, if intermediaries involved, there might be an FCM or an introducing broker registration. And I think a key thing to keep in mind, and maybe really one of the takeaways here, is there's a perceived gap, if you will, that if you're a market participant and you're dealing solely in spot or physical transactions, so not derivatives. And maybe you do an analysis and you think, look, we're clear from money transmission regulation or FinCEN or SEC regulation, so on and so forth. Even though you're not going to be necessarily, you might not be required to register with the CFTC, you cannot assume that the CFTC doesn't have authority over those transactions if something improper occurs. And in fact, they do. And the CFTC does, the SEC may as well. If we're really talking about most cryptos outside of Bitcoin and Ether, and we know the DOJ does certainly as well. So again, I just think key takeaway, don't make assumptions in this area. Regulators want to regulate this space. And, there's probably a regulator lurking and looking very closely and has the authority and the tools if something goes wrong. Glenn, any other thoughts in terms of takeaways?
Yeah, I think in terms of the registration requirements, Matt, this is an interest of DOJ from the money laundering perspective, right? Because certain registrants have to set up anti-money laundering programs, requiring compliance testing, requiring training, requiring due diligence on clients, most importantly, as to who they are, where they are they on any designated terrorism lists or terrorist lists that the US has set up. And so what DOJ is going to look at is, if you have moved your operations offshore, are you maintaining an offshore presence, and are you actually marketing to US customers? Because if you're coming into the US, it doesn't matter if you're outside the US, it's going to be a concern of the DOJ as to whether or not you're trying to avoid the registration requirements and ultimately the anti-money laundering program requirements under the Banking Secrecy Act. And what DOJ will try to set up here is, if they're investigating this and ultimately going to bring charges, is whether there's efforts to willfully evade those requirements. And I think in the context of those willful evasion cases, also in the Ponzi scheme cases, the type of the pump and dump and touting case, the McAfee case we talked about earlier, all those cases, I think what you're seeing is, despite the new technology involved, it's sort of the same old tricks when it comes to DOJ. They are looking for not only data to prove their point, but also what they really want is communications. They want to be able to make the cases seem real, not just to the public, but most importantly, ultimately to a jury. Humanize them. What are people saying? Why are they doing it? And I think if you look across the indictments or the complaints, you're going to see the use of sort of inflammatory language as often as possible in cases that are actually brought, because it makes it a lot easier when you're ultimately up against the jury. And ultimately what that means is that it's a lot easier to get pleas when you can point to someone's own words in trying to get a case closed. And so I think that the takeaway here is, doesn't matter what means of communication you're using, always be careful how you choose your words, because they could someday end up on the cover of the New York Times or in a complaint or an indictment brought by DOJ.
Great, thanks, Glenn. So that concludes this session. Quick hit, if you will, on CFTC and DOJ cryptocurrency enforcement. Thanks to everyone for watching, and we look forward to seeing you next week. Thanks.